How's it going, everyone? It's Sam. I am doing the third video for the $100 a week dividend investing series. I'm really excited to do this. I don't know if I've explained it in this way before, but the real reason I'm doing this is to show people that you don't need to invest thousands each week or thousands of dollars a month. If you can put away $100 a week into investments, that's going to be huge over the long term. Of course, if you can do more, that's great. But at my age, I'm 24, if I invest $100 a week from now until when I'm 60, I should have over $1 million. And I'm doing this through dividend companies because they pay consistently and they grow over time. So while there might be dips in the market, I should be able to bank on the fact that these companies will be trying to pay out their dividends for a long time. So each week I am picking 1 to 2 to 3 stocks that I want to invest in. And so far we've done 2 of these videos. I'll link to the other 2 here if you want to check them out. But today I'm not just showing you what I bought and why I'm buying it, but I also am showing you kind of how many of these shares or how much you might have to invest to get $1,000 a month in these dividend companies or in dividends. So it's going to be pretty awesome to take a look at it. I made an Excel spreadsheet for it, and hopefully you can appreciate it and you get some excitement out of it. I know that these types of videos usually inspire me to try to invest more and to do more. So hopefully you feel that way too. If you like this, please leave a thumbs up and subscribe to the channel. We are going to do this every week and I make videos every day, so that really helps me out. And if you do want to start with M1 Finance, there is a link down below. I really like the format of it. I really like some of the features of M1 Finance. So if you want to sign up and start investing with them, you can use the link below. So this week we are doing our third purchase and we are buying Realty Income. So we're going to put $100 in Realty Income, and this is a company that I hold a lot of in my portfolio, just in general, my total portfolio. It's a company that I really like. So they hold triple net leases, which means that they don't have to do a lot of the maintenance on their properties. These are really long-term tenants. So they are in these contracts for 10 to 15 years. And it's a really steady business model. So it's something that I'm really excited to have in this portfolio. It also is in real estate, so it gives another layer of diversification. So now we have a telecommunications company, we have a bank company, and then we also have this real estate giant that is a monthly dividend paying company. So each month they give dividends to their shareholders, right around 24 cents a share right now. And this might not sound like a lot, but overall it is a 5% dividend company, and it's one that I have been able to buy from about $50 a share on up to about $55 to $57 a share. If we look at it today, it's sitting at about $57 and they're down about 2% on the day. There are a lot of people that are bullish on the stock now. It's down from about $82 a share down to $57, and it's just a really quality company. The PE ratio shows pretty high here, but a lot of these real estate companies are thrown off by the fact that they can depreciate their properties, so PE ratios don't really show too much. If you do want to take a look at them more in depth, I'll link to a video here where I talk about Realty Income in a little greater depth and how I'm planning to buy more, or why it's a stock to watch and buy now. So that is the company that I'm buying now. I've covered them several times in my videos, but if we look at my other portfolio here, I do already own a pretty large position, at least for me, in Realty Income. I have about $735 worth in this portfolio. So just looking at my dividend history here in my main portfolio, I get about $3 a month in dividends from them from my $700 worth. So about $36 a year just from Realty Income is not bad. So I know that doesn't sound like a lot, so let's look into if you had $1,000 a month that you're getting in dividends from these companies, what would that look like? So what I have here are the 3 companies that are in my portfolio: Realty Income, AT&T, JP Morgan Chase. I have their ticker symbol, I have their share price. So right now Realty Income's about $57 a share, AT&T 30, JP Morgan Chase 97.5. So their dividends are obviously different for each share. Realty Income has a dividend of about $2.8 a share, AT&T 2.08, and JP Morgan Chase $3.60. So as we scroll over here, you can see the dividend yield for each of these. JP Morgan Chase's dividend yield is the lowest, about 3.7%. Realty Income is next at 4.86, and then AT&T has that high dividend yield of about 7% right now. So that is what I really like about AT&T. I'm going to be able to use their dividends to funnel into other companies. So to get $1,000 a month in Realty Income, you'd need 4,285 shares. In AT&T, 5,770. In JP Morgan Chase, you need 3,333.333333. What does that mean? Share cost. If you needed to get $1,000 a month in dividends from Realty Income, you would need about $247,000 worth of shares. So that seems like a lot, and it is, but we're going to go through how that can be made easier if you're investing over time. AT&T, you need about 172,000. JP Morgan Chase, about 325,000. So what if you had bought the shares 10 years ago? So these are the share prices 10 years ago. So Realty Income is now $57, $58 a share, down from its $82 a share. But 10 years ago, they were sitting at about $30 a share. 10 years ago, AT&T was about $24.70 a share. JP Morgan Chase about $40.28. Well, now AT&T is still about $30 a share. JP Morgan Chase is about $98 a share. So AT&T hasn't changed too much, but Realty Income and JP Morgan Chase have both just about doubled or more over the last 10 years. So that is one problem a lot of the time with a company like AT&T, where if they pay a 7% dividend, all the time the share price doesn't really appreciate over time because they're paying most of their money towards dividends. Now that's not all encompassing, that's not always the case, but a lot of the time they don't have as much money to reinvest in the company. So 10 years ago, this is the share price. So if you had invested 10 years ago in these companies, how much would you have needed to buy to get $1,000 a month in dividends now? So 10 years ago, if you invested in Realty Income, you would need about $131,000. If you invested in AT&T, about $142,000. JP Morgan Chase, about $134,000. So that seems like a lot, and it is, like I said before, but take a look at what it was before. So the share cost was nearly cut in half for Realty Income if you had invested 10 years ago. AT&T was cut by about 10 to 20%. JP Morgan Chase was more than cut in half. So you saved a lot of money if you had invested 10 years ago. And that's because the share prices were cheaper. They appreciate over time. The dividends also go up over time. So the earlier you can buy them, the better. Over time, you will have increases in your dividends most likely. So that is something that is great for people that are young, people that have time to wait until they get into retirement. This doesn't even encompass if you had left your dividends in there and bought more shares. So this is if you had bought into these companies 10 years ago and collected every dividend in your bank account and spent it since then. So what if you had reinvested the dividend? Well, that is very difficult to see because that takes a lot of calculation, and I mean a lot of calculation, at least for me, because I don't have any programs that would run that. But I will say it'd be a lot cheaper. So if we look at this right here, this is every dividend from Realty Income over the last 25 years. So they pay monthly dividends. If we look here, they're paying about 23 cents a share now. But if we go back and we highlight every cell since 2010, since July, we can see down here the sum of all these dividends is about $23 a share. That's crazy because if we look back here at the share price 10 years ago, Realty Income only cost $30 a share. So if we had reinvested that $23 worth of dividends throughout the time from when it was $30 a share up till when it's $60 a share, this number down here would decrease dramatically. I mean, just off the top of my head, running some quick calculations, I think it would be between maybe $80,000 and $100,000 worth we would have needed, and that would have been a massive saving versus what we have here. Now, of course, these dividends aren't guaranteed. The increases in the dividends aren't guaranteed, but that's why we hold a handful of different companies and why I'm adding more different positions into this portfolio each time that I invest, because I want to have some diversification. If we pick good quality companies, hopefully they will grow over time, their businesses will grow, and we will be able to be paid out higher and higher dividends into the future. So hopefully we have that in 10 to 20 years where we look back and we think, wow, we had a great buy in all the stocks that we have here, They were at a great value, especially compared to what they are now. They're paying us great dividends. They are something that we can reinvest either into our portfolio or we can take it out and live off of it. And the reason I want to go over $1,000 a month is this is a pretty significant amount, at least for people in my position or people in my part of the country. $1,000 a month is maybe a fourth of what you make from work as a family or a fifth of what you make from work. If this was just going into your bank account each month, or if you could get this and just reinvest it into your portfolio, that would help massively. If you were investing $1,000 a month in your portfolio, you're going to have a really great portfolio years down the road. And if you can just collect $1,000 a month on your bank account, that really helps just if you have some kind of issue come up, or maybe if you or your significant other want to take a break from work or you want to go part-time, that definitely helps out. This isn't enough for most people to retire on, but it is something that would really help out and really make you a lot more comfortable, I think. So thank you guys so much for watching. I really appreciate it. Please follow this series. I think it's going to be awesome to see the dividends grow over time. And again, if you do want to use one of those links down below, you can sign up with M1 Finance and follow me along with the journey investing $100 a week. It's never too late to start investing. And like they say, when was the best time to invest? It was probably before. When is the second best time to invest? Now, today. So I appreciate it. Thank you guys so much for watching and following the channel and hitting the like button. I would love to hear what you're buying this week and what dividends you're buying, especially if you're following me with this portfolio. And I will see you in the next video. Bye.